This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. It is Wednesday, July 8th, 2026. I'm John.
And I'm Mary, coming to you this morning from here in Germany. We are your smart friends on the go.
Let's start with the gist for you. Today is all about reality checks, specifically who foots the bill for the future. We are seeing a massive correction in the global tech market and a sharp pivot in energy politics.
Exactly. When we look at the power dynamics today, the core theme is capital discipline. Investors are finally tired of funding endless artificial intelligence infrastructure without seeing actual profits. Meanwhile, governments are stepping in to socialise the massive costs of energy security.
The blank checks are officially bouncing. Let's get into the global overview.
South Korea's main stock market index has dropped 20% from its recent peak. That officially puts it in a bear market, a Wall Street term for a prolonged, steep drop in investment prices.
Global semiconductor stocks also tumbled late in the day on the US equities exchange. Why? The market is punishing speculative hoarding. Tech companies have been buying up artificial intelligence chips like crazy. But investors want to see actual commercial deployment. They want software revenue.
It is a classic shift. Think of the 2000 telecom crash. Back then, companies laid millions of miles of physical fibre optic cable before consumers had the software to actually use it. Capital simply froze.
Right now, the artificial intelligence industry bottleneck is moving. It is shifting from making chips to making useful products. But there is a catch. Building massive foundational artificial intelligence models requires huge upfront money. The payoffs are inherently delayed.
If the market refuses to subsidise this infrastructure, we risk stalling long-term computational breakthroughs. But the incentives are clear. Investors want to limit their losses. They demand tangible utility before they fund any more physical overcapacity.
Moving to geopolitics, crude oil prices are rising in early Asian trade. The US just struck targets in Iran and restored oil sanctions.
This happened a mere 20 days after both sides signed a non-binding agreement on maritime security.
This is hard geopolitical leverage in action. It completely overrides recent diplomatic frameworks, and it directly impacts global energy costs.
Investors are now forced to price higher risks into global supply chains.
It is a clear resource flow. Oil producers benefit from higher prices, while the global consumer pays the risk premium.
Finally, a quick note on artificial intelligence governance. We are seeing some highly speculative academic research emerge. A new paper just dropped on SSRN, that is a popular online repository for early-stage academic research.
The paper asks a bizarre question. Can artificial intelligence models actually consent to human constitutional frameworks? For example, can an artificial intelligence agree to Anthropic's Claude constitution? It shows how fast artificial intelligence is impacting academia. Researchers are actually trying to apply human legal theory to large language models.
Let's pivot to the European perspective. Here in Germany, the Economy Ministry wants a national gas reserve. They want enough guaranteed supply to cover a 10-day emergency.
But the real story is how they plan to pay for it. Berlin is completely bypassing the deadlocked 2027 national budget. Instead, they are funding this reserve through a mandatory consumer levy.
This is a perfect example of how power flows. Politicians protect their own political capital by avoiding a messy budget fight. Instead, they invoke geopolitical supply fears, like those US strikes in Iran we just mentioned, to pass the cost directly to regular households.
The consumer underwrites the state's risk. This move separates emergency gas from commercial markets. It actually discourages private traders from building their own independent buffers. But to be fair, private markets systematically underprice low-probability catastrophes, so state buffers really are necessary.
across the broader European Union, money is moving incredibly slowly. A new review by the CEPR looked at the European Union's Recovery and Resilience Facility.
To clarify, the CEPR is a major network of European economists, and the RRF is a massive performance-based European Union fund designed to boost post-pandemic economic recovery.
The economists found that the fund is facing severe administrative bottlenecks. Bureaucracy is slowing down the cash disbursements. The incentives to rebuild are there, but the resource flow is totally jammed.
Over in the United Kingdom, new polling from Public First shows a stark regional divide. Andy Burnham, a prominent northern political figure, has incredibly strong support among northern voters, but he faces deep distrust down in the south.
And in France, a leadership reassessment is shaking up the National Rally Party. Following Marine Le Pen's legal disqualification, party officials are debating their next move. They are questioning whether they must pull their political platform back from the direction set by their current leader, Jordan Bardella.
That brings us to today's temperature check. Globally, the bill is coming due. Tech investors are demanding real software revenue to justify massive artificial intelligence hardware costs. European governments are shifting the price of energy security directly onto everyday consumers. The era of cheap capital and blind optimism is taking a breather. Discipline and risk management are the new watchwords.
Spot on! Thanks for starting your morning with us. If you found today's breakdown helpful, we'd love for you to join our daily newsletter.
Absolutely. You can get the gist delivered straight to your inbox, completely free every single day. Just tap the subscribe link in the show notes. We'll see you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.